I'd like you to pay attention to this area here. When describing a break pullback under the normal circumstances, a support and resistance trader will normally say you need a couple of touches of a level of resistance or support, resistance in this case, and when price breaks out through the level, then you have yourself a good trade setup. And the idea is that when price breaches that level and comes back into the prior level of resistance, that's a good place to buy. However, I would suggest you want to be a little careful of that trading setup unless it has the trap element to it. Let me explain. So we have a great level that's touched once, twice, 3 times, 4 times. So this is a nice solid level. When trading at the hard right edge, resistance traders will look at those historical structures and make decisions based on the success of those areas previously. So if traders were making money here on the way down, there's a good chance, if that's happened a couple of times historically, that if it comes back into the level, they'll take those trades again. And as you can see, price does indeed sell off. And that's the key part. What we're looking for in a trap break pullback, rather than just a break pullback, is price to have sold off, so that provides some all-important confirming price action that will draw the resistance trader into taking those shorts. And no sooner do they do that, then price breaks strongly above the level, trapping those traders in those short positions. Humans hate to lose, and as a consequence of this, there'll be some traders that are stuck in these negative candles while prices have broken higher above that level. And once they realise that that level's broken, should they get an opportunity to bail out at break even, they'll indeed take that opportunity, as I'm sure you would do the same yourself. Trap trading is all about understanding how you would behave under certain circumstances and then reverse engineering your own behaviour to understand the behaviour of the broader market. So as price comes back into that location, those traders that sold will look to get out at break even, because a scratch trade is the second best trade a trader can have. The reality is most traders' expectations adjust when they realise they're offside in a trade. And it's not all about the money at that point. It's more about, can we get out of this alive? So as price comes back into that level, they can't believe their luck and they'll start exiting at break even as price touches and breaches inside the level. And because of that, that's going to create demand. Because if you sold at that level of resistance, you must buy to exit. And then that creates the opportunity to go long and trade this pair to the upside, knowing that there's at least some demand at that level. The problem with a normal explanation of a break pullback is that it doesn't describe any trap trading at all as price breaches that level. So the only reason there should be some demand there is based on the fact that people like the trade aesthetically. But for me, that's not enough. I need that human consequence to be involved in the trade. I want that psychological leverage over my opponent. I want people jumping out of those trades at break even as I enter to go long. But if price just goes from one end of the range to the other and just sails through that level without selling off first, that's not an area on a chart where I'd like to do business. So always make sure you get that confirming price action so it looks as if the trade was actually going to work out for those traders. And then it goes through the level aggressively beyond that point. Just so you can get a clear understanding of what I mean. Let's draw that level again without all the scribbles. So price was selling off and people were making money, and it looked as if it was selling off again. So that's the key part to this. That's that confirming price action. Because if we were to draw a vertical line and we were to discount that any of this price action had happened yet, at the hard right edge that would have very much looked like it was selling off, i.e. doing exactly what it had done in several occasions previously, and it had worked just fine and made those traders money. But then price breaks through that level aggressively, trapping those traders in here and moving against their position. As price comes back into that location, those traders who were trapped will exit those short positions, and the way they do that is buy into exit, which helps the price ultimately trade higher. So the next time you notice a break pullback setting up, always make sure there's some confirming price action prior to the trap occurring, and that should improve the chances of you having a profitable